Hey guys, Kimo here with Investor Central, and today I'm going to talk about our new software Stacks and how you can utilize it in multiple ways within your scalping and your day trading for you swing traders, and also in the investing perspective of how you can buy commons and use this platform to your advantage. But before I do that, I want to go over some key details that it's crucial for you to understand. First, you need to understand that although illegal, insider trading happens all the time around us. Okay, there's nothing you can do about it. And there's a reason why people track and follow the big money institutions, because quote unquote, someone always knows something. And for you to understand that first is going to be key, because if you're going to be playing the neglected, things don't happen, everything's a perfect world type of trader, unfortunately, it's not going to be working in your best favor, because guess what? It does happen. And our platform does prove that explosive moves and details and information that come out prior to that actually do happen. Using our platform again itself, you need to also understand that alerts through, let's just say, using our STAX AI, which by the way is a whopping 94% plus win rate probability. You can go through these, back test them yourself. We've done it for the past 3 years. And guess what? It's still above 94%. Now I'm going to go back into details of how you can utilize it to your benefit. But first, let me explain this to you. When the alerts come in, let's just use Stacks AI scanner right here for an example. They can come in two different intentions. What does that mean? That means alerts can come in at, let's just say, at a horrific time, meaning their entries are garbage. They bought at the top when they were trying to play the upside, and after they purchased or after that transaction happened, the stock tanked. However, if they were to purchase, a leap or, a couple months out expiration or whatnot, they do have I guess you can say, quote unquote, convictional direction of where that stock may move in the next week or two, or even a couple months. Now, there's a reason for it. It's if insider trading is illegal, and if you had some information that you knew was beneficial for you in the long term or in the long run, but you did not want others to catch you, you want to stay under the radar, wouldn't you also just purchase leaps, purchase at a horrible entry, but play that same direction that you have conviction on? Yes. And it goes back to how alerts can also come in at the best time. But if those alerts came in at the best time, would you play 0 days to expiration knowing that you're going to get a whopping 2, 3, 4,000% return overnight? Probably not, if you know the SEC or someone's involved and they're keeping an eye on how you're trading, because that is going to tick a red flag for you and you do not want to get caught. That being said, a lot of these details, a lot of these data that comes in plays out in that exact manner. For example, let's just use Amazon as a little scenario. It happened on 12/14, right? These are all real-time prints for you. When they come in and they print on our Stack software and on our platform, it's going to be in real time. They give you the spot details of where that options contract was purchased or that transaction was made, of that stock price, and how much money that was spent, what expiration they chose, and the time that it was executed. So everything's going to be in real time. So something for like Amazon on this, and you go back into Thursday, 12/14, Thursday's action. This was damn near the bottom of the intraday move for Amazon before it reversed to the upside. And then following the next day, it squeezed up another 3-4% in terms of the actual stock movement. In terms of these option contract, this guy, he spent $2 million and this guy's already up about 25% return. That's more than 80% of America's annual income that he just made in 2 days. Now, this perspective, this scenario shows you that this particular trader bought out the money, leaps 2025, you can see, timed it perfectly, and then had a nice little 20-25% return in 2 days. Fair enough. If I were, the SEC, if I were someone involved in keeping an eye on particular unusual trades like this happening prior to an explosive move, this could have been like, okay, hey, he bought some leaps, he just wanted to buy the dip. He wasn't really aggressive. It's not like he bought, 0 days to expiration and then overnight made, 2, 3, 4, 5,000% return. So you know what? Fair game. It also can happen on the other end, whereas someone did not time it perfectly, but purchased a couple months out, or, again, a leap. That wouldn't create such unwanted attention to that trader, because it's not like he went heavy, what he usually or she usually trades at. Did not trade like, 0 days to expiration or weeklies where that they benefited a large amount of money in such a short amount of time. Does that make sense? So understanding that and understanding the intentions of these particular trades, you guys need to really understand how institutions also work. Just like if you're a not newer trader and you are experienced, or you have some years of experience under your belt, You also know it's the same thing as upgrades and downgrades. When you have upgrades and downgrades from these huge firms, Bank of America, JP Morgan, yada, 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 and they upgrade a stock and the next day, it tanks or whatnot. They do the exact same thing. Their intentions are to get retail traders to buy it up because they upgrade it. And guess who's dumping on you guys? The institutions. And same when they downgrade a stock. They're downgrading it because they're lowering the price targets. And guess what? Us retailers are going to sell because they're like, oh, these guys are huge, big banks. They're downgrading because they're probably dumping too. But guess who's buying? Those same people that are downgrading. Really capture this picture in your head prior to you looking at all these alerts. And then now we're going to kind of dive into each specific scanner, each specific alert, how to utilize it on a day trading, scalping point of view, swing trading, and also investing. Since we're already on the STAX AI tab, this is one of our specific integrated algorithmic scanners that we are very proud of. It has a whopping 94% win rate probability, meaning at any single time on all of these specific contracts of how they were trading, anything would have went green by at least 20, 30, 40% return. And again, this is all information here for any user that's already utilizing STAX. You can back test, you can trade on your own, and then really hone into the details of these contracts, and you'll see for yourself how they work. This specific batch of alerts through our STAX AI is something that I personally, as long as you manage your risk in terms of how much you're risking in your position, I would follow blindly on. And that's me personally. I don't suggest that you do it, obviously, right? You can do some technical analysis on the backside to kind of see if it makes sense. Going back into our track record of how our STAX AI has been performing, at a 90% plus probability, I would follow blindly exactly of all of these contracts, and they print it exactly for you in real time. Even if you did not want to follow blindly, that's fine. That's actually what I suggest as well. If you were to review the trades, review it. Let's just say this Apple leap right here, okay? This is December 20th of 2024. Someone bought out the money 240 strike. They spent almost $3 million on this. And at what Apple was trading at, it was at $197 per share. So just monitor this trade for the next couple of weeks, couple months. Understanding this information at a 90% plus win rate probability, someone is expecting Apple's to hit all-time high very soon. Now, going into other details, such as big money, this itself has been back tested to have a nice 85% plus win rate as well. Still very high. Again, I wouldn't follow blindly. I don't suggest follow blindly for this particular batch of alerts. But utilizing and understanding what people are buying dips at, or let's just say if people start flowing into shorts and puts prior to you flipping into that bias, then that will give you a certain edge on how you can trade it. Now, going into your unusual batch of options, these are the ones that are unusually based off how volumes moved, open interest, how, let's just say, someone just funneling a ton of premium into a stock that's illiquid, not that liquid, people don't really trade in. As you can see, Palantir traded very poorly on Friday, but someone has been buying the dip on Palantir, expecting it to move at least another 10% plus of the actual stock. In terms of options, that could be a couple hundred, couple 1,000% return. But people are expecting, with the strike price right here of $21, $20 on average. And I think Palantir was trading at, on Friday, closed at $18, right? $18 and like 25 cents or something like that. So people are buying the dip on Palantir, and this is unusual. For this type of scanner and this batch of stocks, it's to be used in your own discretion. It does not have a 85, 90% plus probability such as our STAX AI and our big money scanner. However, it is giving you those unusual trades that someone somewhere is doing something that is out of the ordinary. Key things you need to always look at prior to entering a trade or making a trade is you need to keep an eye on the strike price. The strike price itself, is it out the money? Is it in the money? Is it at the money? Obviously for Palantir, let's just use that for an example because they were the latest unusual calls that we had. It was out the money. Now you look at the expiration after. There's some 23 years right here. We're at an odd timeline right now because if you see 1229, you'll assume that it's going to be this in a couple of weeks expiration. But we've seen some that are at 1229, 24, which is next year, right? So keep a close eye, be laser focused when you're looking at all of these alerts. Keep an eye on the anticipated move right here for the exponential move of what people are thinking that's going to be trading at, and just really look at the premium spent. Obviously 20, 40, 10K, 13, 23, whatever, is not that big of an amount. It really isn't. If we're talking millions, maybe even a couple 100,000 or even a couple million, then that's something that you need to be aware of. But when it comes down to like 10,000, 20,000, you and me can spend that same amount of money. It's not going to be as market moving when it comes down to something potentially explosive, unless you see 500K, 470K in Palantir. That could be a little bit more of the hefty side of you maybe respecting this type of trade. This is our unusual options tab. And again, all of these tabs and whatnot, we're going to have new features and new updates in the near future. But all of the contracts that have been printed, they're not necessarily active. However, if the options contract does expire, it will no longer be on this scanner because it has no use for it. The options itself already expired. The contract is dead. There's no need for you to utilize this type of information. Going into the day trade, the nitty gritty of day trading and scalping, how I've been using it for years. Everything that's print, obviously right now it's Sunday, 11:35 a.m. Pacific Standard Time. Markets closed. Football games going on. There's no live data coming through right now. Fast forward to tomorrow, 6:30 a.m. Pacific Standard Time, because I'm in California. These alerts will come in real time, and they'll come in hot, especially if you have this voice alert on. Again, it'll read to you. AMD calls, 12:29 expiration, 140 strike, $195,000 spent, yada, yada, yada. I'll give you those details so that as you are trading in real time, if going into your active trader, if you use Thinkorswim, you'll see it move in real time. You can be able to execute in real time. And then of course, if you're not going back and forth of, different monitors to look at stacks, you can have those voice alerts on so that it can talk to you and read to you, which is very beneficial for the user experience. Looking back at how you can utilize this from a scalping day trading perspective of how I personally like to use it is if I was sitting on my desk, looking at stacks, having the voice alerts on, and I see many prints. I see a ton of like, let's just say SPY calls going to the ETFs. Picture yourself 9:30 a.m. Eastern Standard Time. Market just opens on the East Coast. You're at your desk. You see, SPY calls start coming in simultaneously. As a scalper, as a day trader, you can go back into your active trader. And how I like to execute trades is if I had my options contract down here, I'll click buttons and I'll monitor how it's trading at. I wouldn't follow blindly yet, and I'm going to explain to you why in a bit. But when I see confluence within my own technical analysis and how I'm trading it, and I see, let's say SPY calls coming in, more than likely I'm going to use that as validation and I'm going to take on that same trade. So this was Wednesday's action right here, guys, when I think it was the FOMC. If you're not familiar with how I trade, I know a lot of you guys for years have been in the Discord and whatnot, but I'm going to explain to you the lines and whatnot in a bit if you are not in it. This is pretty much the price action movement intraday, right? Our left side is our 1 day, 1 minute chart, and our right side is our 15-minute chart, meaning each of these candlesticks is 15 minutes worth of data, price action. So what I look for and how I utilize if my intent is to scalp or day trade, I have my 5 key day trading levels. Day trading levels, these scripts are in the Discord, free for you to use if you're in the Discord. And again, people pay $200 a month just to have these scripts. It's free for you if you're in the Discord. But just to explain what it is, this solid green line is our pre-market high. This dotted green line is our previous day's high. Our solid white line, which is kind of overlapping, is our previous day's close. And our dotted red line is our previous day's low. And our solid red line, which again is overlapping, is our pre-market lows. Now, going back to that exact same scenario where we said, oh, hey, like we're trading with stacks live right now. We're looking at stacks. We're hearing stacks. SPY calls coming in. And all of a sudden, I'm like, oh, hey, this is something that I need to look at, right? And if you're a fast executioner, right, like a scalper and day trader should be, if you're slow at it, I guess what? I don't suggest you being a day trader because you need to have fast execution. You need to be laser focused, ready to type in the stock ticker, change this. If let's just say this was like a different ticker, you type in SPY, press enter, have the chart come out, get ready to execute, have your options contract, your calls and your puts ready to be executed. If you're that detail oriented and you can do it at a really large pace, then this is what I suggest. And this is how I trade, right? If SPY broke out of pre-market highs, which obviously you can see intraday levels of being a resistance, and then SPY calls continue to push this higher and higher, guess what? There's only one directional trade that I'm going to be trading at, and it's to the upside. And again, if you're a scalper day trader and you're trading options, you know how much money you could be making in a short amount of time, which is insane. Now, the opposite route, SPY puts were coming in, and we broke down out of any of these key day trading levels. Guess what? I'll be trading to the downside. Keep in mind that that's not the only way to trade. There's infinite amount of ways to trade. This is just how I found beneficial for me to have some confluence and not just get faked out. Let's just say, for the sake of this example, for the sake of scenario, okay, we had SPY call push in and it went out, it went up. You're in calls now. You're making money. You're up 200, 300, 20%, 30% return. Okay. And then you're scaling out now, right? And you left some runners. If your runners right now and it drops back down below to this key level that you were looking at for your entry perspective, then you can say, hey, let me just get stopped out until the next time we come back up. Because you saw a lot of SPY calls come in, your anticipation is to potentially still play the upside. However, if it doesn't match up to your technical analysis and how you like to trade or how you like to scalp, then I don't suggest you following blindly, right? I suggest you following your technical analysis. It's a huge validation because everything aligns up like it did on FOMC, and SPY calls came in and we immediately squeezed. This 15, 30, 45 hour and 15-minute would have made potentially like, a few months of your paycheck in such a short amount of time. Just understanding this, and again, using stacks as validation. Because if you didn't have stacks and you did not understand how our AI scanners were working, you probably wouldn't have held this breakout play as long as you would have to see in hindsight how it moved. But because you knew that SPY calls were coming in a shit ton over and over again, you had that conviction because 1, you had a breakout, 2, you had stacks tell you, 3, you had all of your prime details continue to validate that direction of play. Then it would give you that sense of validation to hold a little longer, right? Profit a little longer, hold some runners. That is one way. I've also seen many people, let's just say, use these same exact key day trading levels. However, let's just say they bought, calls, and then it fell back down to our next level of support, right? Intraday. Multiple things of, again, how you can utilize it is looking at the expiration, the strike price, and how it's been moving. If you're already in right now, and let's just say you're done, most people right now would like to add at these levels. Until it gets to any of these levels, you don't touch the stop. You let it play out. But when it does, you can add, or you can get stopped out. Let's just say, hey, you're testing out stacks. You're not really, true to your conviction. You're not that confident in your trading yet, but you just want to, come and test it out. Then you can get stopped out at any of these levels too, right? Again, the main goal is to understand and to back test how our STAX AI software can benefit and revolutionize how you trade, because it really is game changer. And again, all the testimonials, all of the profits that's been proven and shown in just 2 weeks have shown a great ordeal of how our STAX software works. I won't go too details on everything else, but that's just a brief scalping, day trading, point of view of how you can see it and how you can utilize it. Next thing is using those PTs, stop losses, as from an intraday key levels of how to utilize it is one way to use it as well. Even if you were to use STAX AI software, right now, the scanner itself, and then you saw this particular trade, even though it was Amazon Leap, you decided to day trade it, you can still do that as well. You can enter, you can exit, you can do anything you want. As long as you have that convictional direction, guess what? It's very, quote unquote, easy to make money. It's the easiest, hardest money you can make, or it's the hardest, easiest money you can make, whichever, floats your boat. But that's pretty much how our STAX software works. Now, from a swing trading point of view, which a lot of people like to benefit from, right? Because a lot of the moves happen after hours or overnight. Going back into finding confluence or whatnot, using technical analysis, last week, Baba was the most phenomenal play that we took on, I think, last week. You can see Babla calls. STAX itself is an integrated software where it likes to not create too much noise. If we were giving you raw data in terms of noise of how puts were coming in, calls are coming in, one contract was coming in, we don't care about that stuff. We care about the market moving explosive directional moves. And you can see the call to put ratio was phenomenally different. We're Sunday, now it's 11:45 a.m. Pacific Standard Time, market's closed. It's not printing as is it's supposed to right now, but everything else was live during on Friday, and everything else was bullish with Baba. And how you can use it as swing trading is understanding the expiration, looking at what these guys are doing as well. People are still buying the dip. They're anticipating a continuation of Baba going into next week, going into the new year. Now you can even scroll down and backtest and look at all of these, right? Our STAX AI also showed Baba. Someone bought Leaps pretty much 1220. Again, this is 2024 expiration. They spent $3.5 million. And then at the point of where they bought it was $71.92. But where's Baba trading it right now? Baba's at $74. This guy is already up like a good 10-15% return in just 2 weeks. If you were to just, let's just say, follow blindly again, and you were to be up 20% return, and you put, let's just say, 100K, that's 20K in 2 weeks. I'm not trying to sell you or the get rich quick scheme or anything, but I need to show you how successful you can be when you have something that's revolutionary like this. It's extraordinary to see how many people can profit a large amount of money. And again, it's discrediting because when you profit such a large amount of money in such a short amount of time, it gets almost too good to be true type of thing. But it does happen. Everything is there for you. All the track record, everything is here for you to look through. As a swing trader, keep an eye on all these expiration and how they are being transacted, right? And of course, you can always use our ticker. Let's go back to Rivian, right? Let's look at Rivian. We had so many Stacks users have like 2,000-3,000% returns just based on Rivian, showing Rivian how it traded prior to it, and having, look, Stacks AI become a key convictional alert for you to utilize as you trade. Again, I don't want to go too details on how everything else, but this is, again, how you should be utilizing this software. If once you click reset, everything is back to how the voice commands and whatnot will be set. So as you're trading this in real time, again, it'll be talking to you. You can search through it. You can scan. Let's just say you wanted to look for like Neo or whatnot, right? Neo is another phenomenal example of what I explained at the beginning of the video of how there were big funds that were buying out the money dips. Look, 2/16/2024, okay, months ago, and now they're up over like 100% return right now. It doesn't have to go to February 2024 for them to benefit. It doesn't have to go to the expiration mark for them to get out of the trade. But again, you have to understand how institutions and people that have a lot of money work. If they have a convictional trade to the upside, and they know something, again, they're not going to spend it all on weeklies or the next week. Okay, it's just too much of a red flag, too much unwanted attention for them. It also doesn't have to go all the way out to this expiration. Going back to the Stacks AI example, right, of Apple, this was the only Stacks AI alert happening on Friday. Someone bought calls. They bought 2024. That's next year's December. Okay, expiration of 240 out the money. This can, if Apple gaps up tomorrow, Monday, and gaps up like, let's just say, a couple bucks, or let's just say 2-3%, this guy would be up over like 10-15% return already over the weekend. This guy spent, again, almost $3 million. Okay, that's like 300K, plus or minus a little bit less over the weekend. Insane. Now, going into the investing point of view, let's just say, you know what, hey, Chemo, I'm not really comfortable trading options. I'm not too familiar with it yet. One, you can take our Investor Central Academy. One of our mentors, Eric, is a phenomenal teacher, concluded a boatload of classes already. We're working on a new version 2, which goes into detail of more experienced options traders. The main course that we taught itself is correlated to beginner options traders. If you do have questions, if you do want to take the course, go ahead and DM me or Eric, get you on that. Let's just say you are still not comfortable with options, or you just don't want to touch options because you know the amount of risk that it has. Fine. So it's okay. Everyone has their own different risk profile. It is what it is. I'm not here to tell you, hey, go all in, let's be a degenerate together. No. Okay. Understanding the Palantir by the dip of these calls. Understanding, if we were to use the scanner right, or the search bar itself, Palantir, we can look at the equity blocks. The equity blocks is telling you how much shares have been transacted for this particular stock. So it's not options, it's amount of shares. So 7.8 million, 2.8 million, 4.4 million, 11 million. How much quantity of shares was transacted at the exact spot they were transacted. Using this in confluence in conjunction with the option flow, okay, it will tell you, and it will kind of persist you that, hey, people are buying the dip on Palantir. As an investor, this could be a huge ordeal, because guess what? If you were trading stocks, you want to be trading stocks that are more liquid, right? Stocks that are people having a lot of volume in per day. This is the perfect example for you to be like, hey, look, let me start to funnel into some Palantir shares then, all right? And guess what? It's okay if over Monday and it gaps up, 2-3%. Yes, you're not making, the hundreds percent return that you would be if you were trading options, but you're still making a 2-3-4% return over the weekend or whatnot. Let's just say you put in 100K, that's $4,000. I'm not saying it's, that easy, but suggesting what other people are doing and following the big money and having our Stack software guide you is what you need in terms of understanding the entire market movers, understanding systematic cycles, and that is going to benefit you greatly. Just because we were talking about it earlier, going back to Baba is still phenomenal for a continuation to the upside. You don't have to trade Baba options. You can buy Baba stock, Alibaba. Simple as that. This is how you can benefit. Going back to the real-time data, if let's just say, again, you're not trading options, you only want to trade stocks, you can type in, let's just say you only trade ETFs first. Okay, you can type in the ETFs, SPY, whatever, and you can only directly trade SPY, only or QQQs, whatever the ETFs that you're particularly trading comes out in. But let's just say you're using raw data again, and now you just realize, there's Baba again coming, or Palantir. Let's go back to Palantir, right? and then you buy Palantir stock, and then we're continuing to go up because you see more call options come in. Guess what? Even though you're trading the stock, you can still sell the stock, right? Again, your gain's not going to be as much, but understanding these convictional directional moves is going to help you have that conviction to trade, to buy Palantir, to buy the dip, or to not buy. Let's just say you're doing your weekly scans, and then you pull up a ticker that has, like, you think it looks good on, technical analysis, like Lulu right now or something. And you're like, oh shit, what the hell is going on? Like, there's no Lulu volume, there's no Lulu equity blocks, nothing like that. That could be a sign for you to be like, hey, I'm not going to touch Lulu today, because it seems like there's more downside ahead for Lulu. So things like that is going to put you on of how you can utilize stacks. And again, I've been using this for years. I've been transparent as long as could be. I've brought in hundreds, if not thousands, of like-minded traders out there to understand how our edge is very, very beneficial. I'm not selling you a Fugazi or whatnot. I'm not even selling you anything. I just want to show you guys how stacks is that leading indicator, is the next big thing that you should utilize as you become a successful trader yourself. Now, again, if you guys have any questions or whatnot, email us at help@investorcentralclub.com, or if you're following us on social media, DM me, DM Eric, DM any of the admins. We can go ahead and get you started, or get you answer your questions or whatever you guys may have. This is our STAX AI software, guys. We are very proud of releasing this. It took us close to 4 years. If you are a close friend or a close business partner of mine, you know how long I've been trying to get this to happen. We're very passionate about it. That's why we're here to bring it onto the public. If you want to give it a try, we do encourage you to do so. It's a phenomenal software. It's very powerful. For the everyday trader, 100% get into this. For the swing trader, 100% get into this. For the investor, guess what? 100% get into this. All right, guys, that's it for today. I hope this video was helpful. Any questions, let me know. Let us know. Happy trading.